India's mutual fund industry has a new entrant to which many investors are flocking. Specialized Investment Funds or SIFs were introduced 7 months ago. Today they have over 50,000 investor accounts and more than 12,300 crore rupees in assets under management or AUM. For context, a higher AUM generally means more investors trust the fund. And now some of the country's biggest asset managers are lining up to launch their own. So what is an SIF and why are investors rushing it? SEBI introduced SIFs as a new category within the mutual fund framework, designed to offer more complex, sophisticated strategies than standard funds. Your typical mutual fund, whether large cap, debt, or hybrid, follows a fairly rigid structure, tight regulations, simple mandates, and broad retail access. But SIFs are built differently. It gives more flexibility than a regular mutual fund and is more accessible than a portfolio management service or an alternative investment fund. Essentially, SIFs are designed for investors who want more strategy, asset class exposure, and potentially higher returns, all within a regulated, structured framework. Now, markets have turned volatile. Returns in conventional categories have started looking compressed, and a growing segment of investors is searching for something more: better risk-adjusted returns, differentiated strategies, and more flexible mandates. SIFs are being positioned as exactly that. The early numbers back it up. The segment hit 10,000 crore rupees in AUM first, then crossed 50,000 investor accounts just a month later in April. Total assets now stand at 12,329 crore rupees. All of this in just 7 months since the first SIF products launched. Since it is relatively new, the growth has largely been concentrated. ICICI Prudential's ISIF leads on investor accounts or folios. Edelweiss's Altiva SIF tops the chart on assets under management. SBI Mutual Fund's Magnum SIF holds second place in both categories. The top 3 fund houses control 71% of all folios and 78% of total industry AUM. Concentration is high, but the field is opening up. In total, 14 asset management companies are live, and at least 6 more are expected to join soon. For AMCs, SIFs unlock a valuable middle ground. The minimum ticket size for portfolio management services is 50 lakh rupees. Alternative investment funds require 1 crore rupees. SIFs sit between, with the minimum investment being 10 lakh rupees. So it is accessible enough to reach a wider investor base, sophisticated enough to justify premium strategies. There's also a momentum effect. As more fund houses launch, product visibility increases, more investors take notice, and eventually more capital flows in. Industry data suggests SIF growth is not concentrated in Mumbai, Delhi, or Bengaluru. B30 markets, meaning cities beyond India's top 30 urban centers, are actually outpacing metro cities in participation growth. So, SIFs look like the beginning of a category. The question is how fast and whether the products launched in this race deliver on their promise to investors. Follow Business Standard for more stories.